Hi, and welcome to the Business Express newsletter. In this edition, we're going to look at tips to survive the end of the tax year. The 2013 tax year ends in just a few days, coming Easter weekend for the vast majority of taxpayers. A few minutes of preparation now could save you hours of grief and expense later on. So here are 5 things that you should spend a few minutes thinking about before the 31st of March that could save you time or tax later. The first is to do an inventory stocktake. Now, if your business has material that is consumed in the process of earning income, such as a manufacturing business, or you purchase goods for resale, such as a retailer, then you should do a stocktake at the end of business on 31st of March. Now, this year, that's Easter Sunday, so that might mean you have all weekend to take care of it. Not that you want to, of course, but you might have all weekend depending on your trading hours. Leaving this until later in the year makes things rather difficult and sort of can leave you open to accusations of tinkering with the numbers if you don't do it right at the year end or as close to the year end as you can. Now, if you deliver service or are a tradesperson, you should also think about unbilled work, things like whether you have stock on a customer site that you are in the process of installing but haven't billed for yet. Do you have any job that is maybe 50% complete but won't be invoiced until April? All those things should be thought about and written down now, and it's much easier to do it right around the time when it happens because you'll recall things more clearly now than in a few months. Recommendation number 2 is to consider writing off bad debts. Now, the IRD state that you can't take a deduction for a bad debt until you have actually written off the debt, or at least recorded the debt as being bad in your ledger. So now would be a good time to go through your outstanding debtors and actually make a note of those who you reasonably believe have stiffed you where collection is getting incredibly low, or likelihood is getting low. Now, as long as you can objectively conclude that there are no reasonable likelihood that the debt will be paid, you can write it off and claim it as a deduction against current income. And if you're on the invoice method of GST, you can also reclaim the GST and put that in your next GST return. Now, this doesn't mean that you have to give up on the debt. You certainly can continue to try and collect the debt. You can still pursue debt collectors and even take them to court. But by writing the debt off in your books, you are making an active declaration that your chances of collecting this debt have significantly reduced. If you don't make the decision before 31st of March, then you can't take a deduction for it in the 2013 tax year. Now, if your business gives product or service on credit, then you most likely have had an issue of some kind with collection in recent times. It's vitally important that your customer engagement process is designed to ensure that you get paid every time, and when a customer does get into trouble, that you know about it and you can collect not just what was originally owed, but get paid for the time and expense of chasing the debt, which can be huge. Now, we have access to what I believe is the best process in the world for getting this area of your business sorted. So please give me a call and we can discuss how we can apply this to your business. Recommendation 3 is to review your shareholders account. Now, if you have a company, then you need to make sure that your shareholder current accounts are not overdrawn during the year, and particularly on the 31st of March. Once you have allocated any shareholder salary and accounted for drawings and any other adjustments that happen to go through our normal shareholder current accounts, if you find that your shareholder current account is overdrawn, that is, you owe money back to the company, then you will have to pay the company interest or pay fringe benefit tax. Now, it's not a major issue, to be honest, but it just creates extra paperwork that you or your accountant would probably prefer to avoid. Now, if you're a sole trader, a partnership, or a look-through company, then this doesn't apply to you. But if you have a regular company, then this is something you might want to have a quick look at. Things you can do now to correct that might be to repay money you've borrowed from the company to make sure that your account is in credit. Number 4, consider charitable donations. Now, if you're planning to make charitable cash donations anytime soon, doing them before or on the 31st of March will allow these deductions to be included in the 2013 tax year. Otherwise, you'll have to wait a whole year to get the tax credit for a company or the tax rebate for individuals. Now, note that you cannot claim a deduction or a credit for donated goods and services, only for cash paid during the tax year. It's important to note that there are limits on what you can claim for charitable donations, especially in private companies, and it can be tricky to manage that. we generally recommend that donations be made from your personal account, not from your company account, and that usually makes the deductibility issues less of a problem. And the last one, number 5, and this won't apply to most people, so don't sweat it if you don't understand it, is that if you have a company with unused imputation credits that date back to 31st of March 2012, then the last day that you can impute those dividends at 30 cents on the dollar is the 31st of March 2013. Now if you miss the deadline, you can only impute the dividends at 28 cents on the dollar going forward. Now this is a very tricky area, and there are penalties for over-calculating your imputation, and in some cases it's just better to take the lower imputation later and be done with it. So please, you'll have to check with your accountant before you make any rush decisions here on dividends. But if this is something that applies to you, you might want to have a quick think about that now. So that's it, your quick guide to 5 things you should look at now before the end of the tax year. I hope you found them useful. At Business Express, our mission is to help you be successful in your business. We do that by making sure that you get the right advice at the right time to get started in the right gear. We give you tools to save you money and make you more efficient. We help you get moving faster and stay on track. And we give you the information you need when you need it so that you can manage your business and not wait for your accountant or someone else to be able to give you the information you want. And when you need it, we can provide a coach to help you through every turn, whether it be to get your accounting sorted, to help you with your bookkeeping, or to grow your business. If you've got any questions coming out of this presentation, feel free to give me a call. Our number is 04 83 11 232. Thanks for watching, and we look forward to seeing you again next month.